With the Purchasing Managers Index data released today for both Spain and the euro area, we're taking a closer look at how they both compare by talking to Ben May, Senior Eurozone Economist from Oxford Economics. So Ben, Spain has been showing increasing signs of bullish business conditions in the services sector over the past 5 months, with the latest indicator for March showing 57.3. How does this trend reflect the state of the economy overall?
The data that we've seen in Q1 for Spain is sort of a continuation of the recent trends we've seen, where Spain is staging a very healthy recovery and is obviously one of the strongest growers in the eurozone as a whole. And I think really we're seeing that as fairly broad-based. So some of the improvement is obviously down to things like the lower oil price, helping to support household spending, but also we're seeing a turnaround in the labour market, which is obviously helping to boost households' incomes too. And really, I think we're just seeing the fruits of that, which is in part based on perhaps some of the labour market reforms that have been undertaken in Spain over recent years.
Despite high unemployment, Spain seems to be on the road to recovery, with the PMI data providing another boost. How does this then impact on the euro area?
Well, I think certainly the high unemployment is clearly an issue for Spain. It's going to take a number of years for the unemployment rate to fall down to more acceptable levels, if you like. But really what we are seeing unemployment falling, which is obviously a good thing, and that's being driven by rising employment. So that's obviously supporting growth. I think really the reason why Spain's doing so well is it has undertaken various reforms, and it's also benefiting from things like the weak euro, and also perhaps the fact that it's having to implement less austerity than it was a few years back. So I think all of these things are really coming together and generating quite strong growth in Spain, and obviously that should help the wider eurozone recovery as well, for countries that export to Spain. That obviously the robust domestic-driven growth in the economy is clearly a big plus.
The Euro PMI data has also been released today too, showing the economic conditions in the Eurozone services at 54.2 for March, reaching an almost 4-year high. Is this a significant shift to a sustainable recovery?
Yes, I think really the latest European data are just a continuation of a recent trend and suggests that the Eurozone recovery is slowly gaining momentum. Certainly, we've been at the more optimistic end of the consensus on the eurozone for quite some time, and we really feel that this is vindication for that view. We sort of see perhaps growth of 0.4, 0.5% in Q1, which would obviously be a good improvement on what we've seen over previous quarters, where I think the strongest quarterly pace of growth up until now during the recovery has been a measly 0.3%. So I think really we're seeing that the recovery gain momentum. Some of that is perhaps to a certain degree temporary in nature, reflecting the plunge in oil prices and the associated fall in inflation. But there's also signs of the labour market recovery gaining a bit of momentum in the region, and obviously in time the weaker euro should help exporters. And also, perhaps as domestic demand strengthens, firms' desire to invest will start to increase, and that should be helped by the fact that interest rates are falling very sharply, thanks to the falling government bond yields in the eurozone, and perhaps banks are starting to become a little bit more willing to lend. So certainly we feel that 2015 will be a much better year for the eurozone.
Thank you, Ben. Check back with Dukascopy for more updates throughout the week. Goodbye for now.